So let's think about now all the units we worked on in June as we think about work in process and finished goods. Okay? The cost we're going to be adding to finished goods here. Well, we know at the beginning of the period we had 10,000 units, right? 100% complete for direct materials. We're adding nothing related to direct materials for them. So make sure I say this right. Direct labor was 30% completed, leaving 70% to be done. So we did 7,000 units of direct labor, 70%, the amount that needed to be completed for those 10,000 units at the 51 cents equivalent unit, which we just calculated. So it cost us $3,570 to complete the direct labor from last period's work. Similarly, factory overhead was 40% completed, leaving 60% at $1 per unit, $6,000. So this 12,680 carried over. That was the amount that we spent last month on these units. And we added 9,570. And here's the total cost to go into finished goods for those units that you finished from the previous period. That's what this is. Then we started and completed 34,000 units. How do we know that? We know that we completed a total of 44,000 units, and 10,000 were finished that started the previous period, so 34,000 were started and completed. It's this math that we did over here. At the full cost, the cost of that was $87,740. So the total cost of everything that you're done with in your department, that you're sending on to another department or it's finished, is $110,990, the sum of those two. Now you have some stuff left in work in process. You worked on this period. It's going to be finished next period. You have to assign the cost based upon the percentage complete on them. Direct material, 6,000 units, all completed for materials, 50% completed for labor, 60% completed for overhead at the assigned equivalent unit costs. And so that's the amount that's going to be in working process for the next period. And it all adds up to that total amount again. So two things have happened in this. We did all this math. Or we looked at all this math. We didn't do it. The one, we've assigned for accounting purposes the amount of the cost that's going from work in process to finished goods. And we've assigned an amount that stays in work in process inventory to be finished next period. That's the net effect of these processes. So how do you choose between the two? Weighted average is easier. FIFO is a little bit more complicated, not terribly. Once you get used to it, it's just subtracting out some numbers at the end of the day, but you have to get used to it. If your month-to-month costs don't fluctuate much, your per unit cost doesn't fluctuate much, then you might as well do weighted average because it's easier. But if you have like a large component that's of direct material, let's say that's oil, that the prices fluctuate, or for some reason your labor costs fluctuate from month to month, then FIFO is more appropriate. But if you're pretty stable from month to month, weighted average is going to give you a good enough answer. Okay,